continue.
Yeah, I think
Okay.
yeah, the concept of the green bond, it's like a standard model, but we move it into this our specific setup. So the background, where it's coming from, or where the idea is coming from, this green bond, it was like that we have a number of projects in emerging countries, and with the development aid organizations, and so very often in the end it was a financing problem, so that a lot of companies and people who want to implement something have difficult to implement it with required money. So we said we need like a new setup to bring it together, and principally we have like two platforms. One is the investor side, and people who want to invest in green business, and but are not able to do it because cannot invest like 100 million or 10 million in projects. So we try to cut it in smaller pieces on the investor side on one hand, and on the other side we have like projects which has by size, they are so small that they cannot find international investment, and the local investment is not really fitting to the requirements as well. So we have like a gap. We have like on one hand projects, and on the other hand we have investors, and to bring it together was one of the main challenges. So that's why we're designing a product which fulfill both requirements. So, and the enPower.life is like a brand. We are supported by different organizations. So one is Get Invest. This is a European organization with different donor. They help us to formalize the financing and setting it up. Then we have like the Green Bond Principles. This is our own framework what we are following, and so this bond is like a very specific finance product in the end. So how is our bond looks like? We have like a face value of 100 euros. So that means one investment is 100 euros, and we have like estimated annual profit sharing of 6% and fixed rate 4%. So we estimate that we have like around 10% coupon rate in a year, but we have like this fixed and profit sharing as well, because the markets are risky markets on the other hand as well. So long-term risky market is how it looks like on the side in the emerging countries, but good opportunities on the investor side as well.
So, Thomas, just one question raised from one of our participants. So then, are we a mixture of the standard bond and the pay for performance, or are we? So, how would we categorize between these bond types?
Yeah, this is principally like the second model, I would like to say, so that we have like a fixed rate which we guarantee to the investor, and then depends on the performance of the projects we are sharing this part. So but since we have like we have it like together in one package, so we on one hand the bond issuer, and on the other hand the implementator in the same setup. So we didn't pay the implementator additionally something, so we have it like in one package and can share the profit directly to the bond investors as well, if the profit of the project is good enough. This is more a question of the risk sharing on the market. How good is the performance? But we have like different, we have like a client portfolio. So
Mm-hmm.
we're mixing the client that we have like different risk profile on the client side.
Okay, thank you.
Yeah, well, so this is like the like the calling bond features. Um, so we're setting it up. There are like minimum requirement for bonds. So the number is on one hand quite high, on the other hand quite low. So it's 200 million is the size. So this is the total size which is possible to invest. But this is on the other hand like almost the minimum requirements. So because usually green bonds are used for utility size power plants and very huge power plants. What we are doing here, we are taking the investment and cutting in smaller pieces in smaller projects. So that's why I said the total size is quite big, but it's running this way that if we issue the bond, we can cutting this in different rounds, and one round, minimum size of one round is 15 million, and 15 million is already a reasonably number for this type of projects. Yeah, principally 50 million you can easily invest in one single power plant, but we want to cut it in smaller pieces that it's fitting to our market requirements. As I said, the face value, this is 100 euros, so you can buy it in 100 euro pieces. Then we have the maturity time, so that means latest in 10 years we pay this 100 euros back. Coupon rate is at the yield every year. Then we have a redemption premium. This is, we estimate that we can pay back already earlier. So we have the possibility to buy back the bond, but then we pay like 101 euros, so we pay like additionally 1% if we buy back the bond earlier. Tradable is, it's possible to trade the bond. The thing is that we need like a platform. The bond, and this should be ready in 2020, in the end of this year. Be possible. It's possible right from the beginning, but technically difficult because the investors need to know each other, so we have to set up a platform for this. Yeah, so we have some other main points. This is like, I would like to say the asset backed is important. So we guarantee that we are buying from this bond, we're buying equipment. So they have like assets in the back. So we don't move this money into something which is not really touchable, I would like to say. It's not manpower or other type of